Welcome to our video on the pros and cons of leasing a car versus financing a car in Canada. Whether you are in the market for a new vehicle or just curious, this information will definitely help you make an informed decision. Let's start with leasing. When you lease a car, you're essentially renting it for a period of time, usually 2 to 4 years depending on the term. During this time, you make monthly payments to the dealership or the bank, but you don't essentially own the car. And at the end of the lease, you can either return the car or purchase it for the remaining value. One of the biggest advantages of leasing a car is that you're able to drive a new car every 3 years. Another big advantage is flexibility to upgrade to a newer model or change the vehicle type. Say your family needs change, you have a kid, you can get an SUV and change quicker. Additionally, it's typically lower than finance and or loan payments, and you're only paying for depreciation of the vehicle during that term. Nowadays, you can even make $4 down payment. So essentially, you only pay for depreciation. However, there is some downside to leasing. You're responsible for any damage to the car beyond the normal wear and tear, and you're also restricted by the mileage. And if you exceed this mileage, you will be charged an extra fee. And additionally, if you like to modify a car, you can't really do that because you don't own the car. Now let's talk about financing a car. Well, financing a car, like the name suggests, is essentially you're taking out a loan to purchase the car for its MSRP. You will make monthly payments to the lender or the bank, and once and only once the loan is paid off is when you own the car. Counter to what many think, it's only after the loan is paid off that you own the car. It's not like you own the car for the first few years until it's paid off. Having said that, the idea is that you will own the car at the end of the payment and you are tied in for that amount unless you sell the vehicle and recoup some of it, which allows you to modify it and upgrade the car if you see the need. You're also not restricted on how far you drive, the number of miles you can drive. It is going to be your car. And like I said before, you can actually sell the car and at any time and possibly make money on it given the market nowadays. However, there is a downside. The loan payment is generally going to be higher than the lease payment, and you're also responsible for maintenance and repairs beyond the warranty time period of the car. Additionally, if you're not careful, you can actually end up owing more than the car is worth. This is very specific to cars that depreciate a lot quicker than the payment is. So the payment never actually catches up to how much the car is depreciated, and it would be upside down for a very long time till you can actually make money on the car. I mean, a lot of people don't talk about it, but these can really add up and it can be a significant cost, but you don't realize till you actually need it. But it's always good to know. But without a shadow of a doubt, financing will cost more on the long run. So in short, leasing is a great option if you want lower monthly payments, you don't drive a lot, and you like to change your car every few years. However, remember that you will not own the car, you cannot make any modifications, and you're limited by the mileage. Whereas financing is a great option if you want to own the car at the expense of paying a higher monthly payment and being responsible for maintenance and repairs. So pick what makes sense for you and your family, but it's always good to know what the options are. Well, thank you for watching. We really hope this information has helped decide which option is best for you. Please like and subscribe for more such content. And again, thank you so much for watching. Have a great day.